What's up YouTube, Dougie Chong here. Welcome to today's episode where I'll be reviewing one of the largest oil and gas companies in the entire world, Exxon Mobil. So I'll start things off with a brief history of the company. They were formed in the year 1998 by the merger of the companies Exxon and the companies Mobil, hence the name Exxon Mobil. I think I'll call them Exxon for the rest of this video, just because Mobil, I always want to say mobile. But the truly interesting part about the history of these two companies is that they are both direct descendants of one of the largest monopolies in US history, John Rockefeller's Standard Oil Company. For those of you that don't know who John Rockefeller is or the story of Standard Oil, I'll leave a link in the description below, but basically John Rockefeller was able to monopolize the oil industry in America by taking control of the transportation of the oil by trains. He was a very savvy business person and is considered one of the wealthiest Americans to have ever lived, and he was able to buy up all the smaller competitors and make a huge monopoly known as Standard Oil. This company got so big that the government actually forced it to split. It took Standard Oil and split it off to many of the gas and oil companies that you know today. To get an idea of the sheer size of Exxon Mobil, they made about $260 billion in revenue last year. That's about 14 times as much as one of the biggest players in the restaurant space, McDonald's, which only had a revenue of about $20 billion. And this revenue is not low margin either. They had about $14 billion in net income. That means their net income was almost as much as McDonald's entire revenue stream. This same monopolization is starting to be seen by big tech companies today such as Google and Amazon, but even they are not forced to split apart yet. That just puts perspective into exactly how big Standard Oil was for the government to get involved and force it to split into different companies. To get an idea of how Exxon Mobil makes all this money, let's take a look at their 2019 annual report. Now, because Exxon Mobil is such a big company, they break their revenue into three main streams. The first stream is called Upstream, and the second stream is Downstream, and the third stream is called Chemical. Now, I'm no expert in the oil and gas industry. Please do your own research before investing in this company, but I'll try to break it down as simple as I can. So Upstream is where a bulk of the revenues come from. About 70% of the revenues are from this division. Basically, Upstream is the process of getting all the oil from the earth. All those deep water mining rigs, regular mining rigs, or huge machines that extract oil from the earth. This is what is known as upstream. This makes a lot of sense in my mind because extracting oil is a very capital intensive process. And so it creates a kind of moat around the company and makes it very hard for competitors to compete against them. And downstream is all about supplying the oil and gas to the customers. So this could be either Esso gas stations or supplying gas to airplanes. One important competitive advantage of Exxon Mobil is that they're located in 41 different countries. This makes them very diverse and makes them resistant towards natural disasters. Because if a hurricane is happening in one part of the world, it will not affect the business in another different part. And the third category of chemicals is just supplying chemicals and other compounds to other big manufacturing companies. This is only about $3 billion of their $14 billion net income, so it is a fairly small part of their income. Alright, now let's look at the 1-year price chart for Exxon Mobil. They were as high as about $81 and then dropping towards about $60 here in February before nosediving to about $30 a few weeks ago, and now they sit around $40. This makes it about a 50% drop from its 1-year high and could be a potential buy signal because of how strong their business model is. This dramatic drop in stock price is due to a double whammy of two main factors. The first one is of course the health crisis that's going on right now, and the second one is an oil price war between Saudi Arabia and Russia. If you look at the 5-year price graph, it's been hovering around $80 for quite some time. This isn't to say that the stock has not done well by shareholders because they have an 8.6% dividend yield right now. Of course, it would have been lower when it was trading at about $80, but it's still a pretty decent dividend payout. And with a PE ratio of around 12, it is way under the S&P average of around 20. Now let's get into the BS part of the video. That's the balance sheet portion. Alright, now if we look at the current assets of Exxon Mobil, they have about $50 billion. As for their current liabilities, it's a little more than their current assets at $63 billion. So this is just a little bit more than their current assets. Certainly not ideal, but it is manageable. But this company's balance sheet truly shines when you look at their total assets. They have about $312 billion in total assets. I guess this makes sense because a lot of their assets are in big, deep water mining rigs, which have a lot of value, but they're big, concrete things. And as for their total liabilities, it only stands at $99 billion. This means they have about 3 times as many assets as liabilities. This is to be expected from a company as large as Exxon Mobil and with a business model that is fully well understood. But even I am left a little impressed after looking at that balance sheet. Alright, so now we've looked at their business model, we've looked at where their stock price has been in recent times, and we've looked at their balance sheet. But now I'm going to outline 3 main risks with Exxon Mobil. The first main risk is that they become complacent with where they are and spend way too much money on middle management. This is a common problem that a lot of big companies have because when you get to the top, there's not much more you can go. This point is emphasized on a company like Exxon Mobil because there is only a limited supply of oil in the earth and there's only a limited supply of oil that people actually want. So a lot of their increases in revenue and growth have to come from improving and making their processes more efficient. I would say the risk of this company falling into poor management is low though because they've done well historically for a number of years and they're a descendant of the great John Rockefeller. The second key risk to this company is if the oil price war between Saudi Arabia and Russia continues and the oil price never returns to where it used to be. The oil price war is just these 2 countries lowering their price to try to get the most business, but at the end of the day, they're just going to raise the prices back up because neither of them are profitable at these lower levels. So if this price war does continue, then this will certainly be a big hit to the company, but as I mentioned earlier, it is in no one's interest to have this price war continue. And the third and probably most real risk to the company is if renewable energy sources develop a lot faster than expected. Exxon Mobil has invested some resources into renewable energy sources, but not nearly as much as other companies such as Enbridge. I'll leave a link to that stock in the description below. But basically, the management at Exxon is hoping that the oil consumption rate will go up in the future and that renewable energy sources will not be commonplace until much further down the road. So this renewable energy source risk is a huge risk factor because it's not a matter of if renewable energy sources are coming, it's a matter of when they are coming. It's already been determined that we cannot survive off these fossil fuels and we will have to use alternative energy sources eventually. So for that reason, you cannot buy Exxon Mobil and expect to hold it for the next 50 years like a company like Apple or Amazon or Disney, maybe McDonald's, because this business model will not sustain in the future. And those big expensive mining rigs will essentially become obsolete. So even with all those risk factors, in my opinion, Exxon Mobil stock is a buy. Again, this is just my opinion. I am not a licensed financial advisor. This is not legal financial advice. But basically, I'm not looking to hold this stock for the ultra long term like 10 years or anything, but in a 3 to 5 year outlook, which is what I usually look for in stocks, I think Exxon Mobil has a great potential to zoom way higher. Even with its recent jump of about 30% from around $30 to $40, it is still at an attractive price right now, being about 50% down from its 1 and 5 year highs. Their balance sheets and revenues were really impressive. I'm usually not that impressed when I see a company's balance sheet, but it was truly stellar to look at. But that's just my opinion. I'd love to know what you guys think in the comments below. And the whole reason for this whole price drop in the first place is for the health crisis that's going on, as well as the oil price war. This can make it a once in a lifetime buying opportunity. So for me, I'm going to be looking at starting a position in Exxon Mobil stock in my simulated stock trading portfolio. I'm going to start a very small position in my account and start averaging my way down. I'm not going to be buying super heavy at these price levels. I'll end the video off with a quick update of my simulated stock trading portfolio. For those of you that don't know, I'm going to be posting all the trades I make on that account on the Discord chat. I'll leave a link in the description below. But basically, I did not buy or sell any stocks recently. I looked to try to sell some Google shares today, but it was just a few dollars off from my price point. I'm going to sell the shares because they shot up about 20% in about a 2-week time frame. That is just way too fast for a stock to shoot up in such uncertain times with no real good news. And considering this account started with $100,000 at December, right before this big health crisis started, and we're only down around 8% at $92,000, I'd say the account is doing pretty well as of now. That's it for this video, guys. Hope you learned a lot about Exxon Mobil stock. Let me know what you guys think about it in the comments below. Love it, hate it, I'd love to hear your opinions. Don't forget to leave a like if this video helped you at all, and subscribe if you have not already. As always, enjoy the rest of your day and see you in the next video.